Okay, so we explore 4 options here to find the best residential REIT for your investment needs and portfolios to help you to grow wealth and income during 2023 and beyond. Stay tuned to hear my thoughts on which ones are the superior choices for which type of investor. First off, we have Avalon Bay Communities. Now, I'm just going to go through the forecasting calculators here on Fast Graphs to give us a sense of what we might expect. So Avalon Bay Communities, AVB, is well followed by the analysts, with about 14 analysts following this, at least for the present year. Now, this is set to AFFO, Adjusted Funds from Operations, enabling us on this blue line to get a sense of price to AFFO ratio, which is more or less the same as a PE ratio, but adjusted for the different financial circumstances that REITs face compared to other industrial companies. So what I've done is this blue line is drawn at the average price to AFFO ratio from the last 5 years of about 22.3. So as you can see, the market tends to price AVB at a premium, and I think we'll see that over all of these companies today. AVB is A- rated and has about a 40% debt to capital ratio as well. Now, as we can see here also, if you look at the analyst estimates for AFFO over the last 6 months, we can see there have been revisions downwards, but not too bad. Dividend yield, starting yield today is about 3.6%, so not incredibly strong, but we do see some reasonable dividend growth over time as well. Now, looking ahead in 2023, analysts are expecting about a 7.5% AFFO increase. 2024, another 4% increase. And we won't go beyond that because there's only one analyst reporting, so it sort of skews those results. Now, if we look then at the forecast here, if we invested today and prices accelerate and increase up to reach the price to AFFO ratio estimated, and the analysts have the AFFO estimate accurate, then what we'd be looking at is this, which is about a 33% total gain or a 16% annualized rate of return. So I'm just going to step through them a little bit more quickly now. EQR, Equity Residential, again, reasonably well followed with about 16 analysts this year. I think there's, as far as the analysts can see, less of a drop-off on AFFO. Again, the price to AFFO ratio over the last 5 years has been higher at about 24 times, slightly higher starting dividend yield of 3.9. And a reasonable growth rate here in the dividends as well. Slightly higher AFFO growth rate as well. Now, analysts for 2023 are looking at about 8.5% AFFO growth and about a 4.6% for 2024. If we bought today, we'd be talking about a 37% estimated rate of return in total, or about 18% per year. Now, Avalon, following those two, Essex Property has a slightly lower credit rating, but it is a dividend aristocrat. As we talked about in the previous videos, they have sold off quite strongly. Now, as we can see from this as well, there has been a decrease in the AFFO estimates from the analysts, a little bit harder than in the previous company, but we also have a reasonable starting dividend yield of 3.9%. Now, because of the strong sell-off, coupled with reasonable AFFO growth here of expected 2023 5.7% and 2024 2.3%, we would be left with approximately a 46% rate of return in total, or 22% annualized rate of return. Now, of course, this is predicated and assumes that prices return to those price to AFFO ratio levels, and these AFFO estimates are accurate. Mid-America Apartment Communities. So again, over the last 6 months, the AFFO estimates have been revised downwards, but upwards in 2023's case. So this is probably looking one of the more solid options here. A- credit rating, 42% debt to capital, so better than Essex, as we saw before, which has a much higher debt loading. Mid-America Apartment Communities has a 3.6% starting dividend yield, and we can see a history of relatively strong dividend growth here as well. Now, looking here, they're above the 5-year price to AFFO line of about 20 times. Now, what that would indicate here is what we do see, which is because they're relatively fairly valued at the moment, we're basically only capturing the growth in AFFO plus the dividend yield for a total rate of return of only 10.6% in total over the next almost 2 years, or an annualized rate of return of only about 5%. Now, the final option here as well, again, if we just ignore 2025 because there's only one analyst reporting, it skews those results. Next Point Residential is a very small, comparatively small REIT here, about a $1.2 billion market cap. It does have a relatively high debt to capital ratio as well. And it has, over the last 5 years, had a price to AFFO ratio of about 18 times, so it's not usually trading at quite a premium. Comparable to most of the other REITs we've just looked at, it has a dividend yield of 3.3%, and the estimates, in contrast to the other REITs that we've looked at, the AFFO estimates for 2024 have been revised upwards over the last 6 months, although they've been revised downwards slightly for 2023. Now, if all goes well and prices return to these levels, by the end of 2024, we might have a 35% rate of return, or about 17% per year. And that's really based on the 2023 increase in the AFFO of about 5.8%, followed by a strong 2024 expectation of about 8% AFFO increases. Now, noting here that we're below the blue line in terms of the prices, so it's slightly undervalued now, with a reasonable starting yield, I think, for these type of companies. Now, I just want to quickly go through the long-term growth. So this is where the analysts estimate roughly the annualized change over time. So here we're talking about an annualized change in AFFO. So these two analysts are expecting a roughly 12% decline in AFFO for Avalon Bay Communities over time, so a rather negative picture. Scrolling through, EQR, again, two analysts are expecting, in contrast, about an 11.6% annualized improvement in AFFO each year. Essex, about a 7% increase in AFFO each year. Mid-America Apartment Communities, an approximately 3% change in gain in AFFO each year. And Next Point Residential Trust, at approximately 8% gain in AFFO each year. Now, what does this look like? So if you're looking at Avalon Bay, they've got quite a nice diversification here over the US states, although they do have quite a lot of established capital invested within the Pacific Northwest, as well as the Californian regions. We'll talk a little bit more about the implications of that later, but also out here right on the East Coast. Now, they also have expansion regions here in Denver and Texas and Southeast Florida, although these are looking as though they are going to be a little way out at the moment. Now, Essex is similar to some of the concentration there that we saw in Avalon Bay. Here, Los Angeles, San Diego, Northern California, and Seattle. So the same sort of western side of the US. Now, these are all regions where there's been a lot of talk lately about people leaving and, corporations leaving, say, California. However, there's still a strong feeling from many residents from those states, what I've been told by some of the people living there, that, this is still a desirable, they're still desirable places to live. So there's some conflict here. If there's an outflow, it could make it harder to actually rent out some of these properties, or they might not be able to do quite as well in terms of those rental rates. Okay, Next Point Residential Trust. So obviously one of the smaller REITs here, and a relatively low, I think, portfolio occupancy of about 94%, but concentrated here in Las Vegas, Phoenix and Arizona, Texas, through here as well. So we're talking about quite a strong sort of Sunbelt focus in the southwestern and southeastern US states. So quite a different focus, say, from Essex and Avalon Bay Communities as well. Now, obviously as well here, also looking at quite a strong growth engine for the company. And perhaps a final point here as well with Next Point Residential Trust as well is this really high 12.7% insider ownership. So you can tell that the people running the company, they have the same interests as you. to the shareholder. So that's always encouraging to see that they're going to make decisions which are going to be long-term shareholder focused rather than just decisions which are designed to do well for them as executives of the company. So I like this high insider ownership as well for next point. 4 good options in residential. What do you need to think about? Think about your time horizon. How long is it until you want to retire? Are you a long-term investor with decades before retirement? Consider long-term AFFO growth and long-term capital appreciation as a key metric for you. Or are you close to retirement or looking to preserve wealth and generate income? You probably want something with a good credit rating and good stable prospects that's been around and will stay around for a long time. Next point, residential is probably a good choice if you've got a long time frame and a long-term horizon and you can ride out volatility. Equity residential appears to be trading at a good valuation and also has some good long-term prospects. It has the benefit though also of the S&P A- credit rating and a strong strength and position. I do like the long-term debt to capital ratio also, suggesting strength and stability. Now this isn't all you need to know. You also want to ensure that these are safe and secure investments that match your needs. So watch the next video and we'll talk about how to do that today.